Seemingly every month, a legacy automaker makes an announcement outlining bold plans to decarbonize its operations by investing in electric vehicles, or EVs. Simultaneously, we've seen plenty of new players enter the space. A few years ago, Tesla seemed like the only true EV investment opportunity. Today, the industry feels more crowded and competitive than ever. Hi, I'm Kate with the Motley Fool, and I dove into the world of EVs with contributing writer Daniel Foelber, and we discussed the future of EVs, the latest on Lucid and Rivian, what makes Tesla unique, and some other investment ideas worth considering now.
Yeah, so Lucid and Rivian have a lot in common. They're both relatively new to the public markets, have little to no revenue, but great management teams, really impressive technology, and a lot of cash. Lucid actually went public on July 23rd when it merged with a SPAC called Churchill Capital IV, and that gave it $4.4 billion in net cash that it's going to need to scale its operations and fund 2022's business. I think Lucid's real claim to fame is its battery technology. So its CEO and CTO, Peter Rawlinson, is very adamant about battery efficiency, not just the size of the battery pack. So Lucid has a better battery efficiency than Tesla, than Jaguar I-Pace, than a lot of the big luxury brands out there. And its roots are actually in battery technology before it became its current Lucid group. It's been around for a long time. That's something we'll touch on with Rivian too, is these companies are new to the public markets, but their technology has been in development for 10 plus years. So in addition to having a very efficient battery pack, Lucid's done a very good job in 2021 of delivering on its promises. It set a lot of pretty ambitious goals, and to its credit, it hit them. So, it merged with Churchill Capital, got access to a lot of cash. It had very ambitious range ratings and horsepower ratings that the Environmental Protection Agency, or EPA, validated actually higher than Lucid estimated. So the EPA gave its Dream Edition range a 520-mile rating, which was higher than Lucid estimated. So the fact that it underestimated a very, very good range rating is just a testament to how good its technology really is. It also began mass production on time and customer deliveries on time. So it began mass production in late September. Customer delivery started in late October. So when you kind of go through the timeline of Lucid, that is really what it's done, is it's delivered on promises. Transitioning to Rivian, the R1T pickup truck has really taken the market by storm. Compared to Lucid, which has 17,000 reservations across its Air luxury sedan line, Rivian has 71,000 reservations for its R1T truck. It's pretty jaw-dropping, and that's coming from, I think, 48,000 reservations just as of September 30th. So you can see that Rivian is growing its reservations just in a few months what Lucid has in totality. So the demand is really, really there. It's got over 300 miles of range, pretty competitive torque to the existing pickup trucks out there. And what Rivian has done very well is build a brand that is kind of in that outdoorsy Jeep style, and they're actually building their own charging network too. They're investing in a new manufacturing plant in Georgia, growing production from their Illinois plant from 150,000 to 200,000 vehicles a year. Both companies, a lot of cash, great management, really good technology, big backing. Rivian is backed by Ford and Amazon. I think the big difference between Lucid and Rivian is a bit bulkier. It's going to spend a lot more money. It's going to produce more cars from the get-go. And, that's a higher risk, higher reward play in my mind. It's also a more expensive valuation. Has a market cap above 90 billion, whereas Lucid's 64 billion. They're really these growth stories, right? So those are the big differences between the two. But again, both companies deserve a lot of credit for making some really impressive technology that certainly has legacy automakers on their toes. A lot of people want to compare Lucid and Rivian to Tesla, but the idea that there's going to be, the next Tesla, it might really never happen, because everything that went into Tesla's success, it was kind of this perfect storm of the industry doubting if it could happen, similar to the oil and gas industry doubting renewable energy. And then Tesla, again, they made so many mistakes early on. It's easy to look at the end result where the stock chart is today and say, wow, like that was just an easy call, easy pick. But I remember 5 years ago, they were over-promising, under-delivering all the time. Musk is talking back to analysts on conference calls. It was a very dicey situation. And Tesla had so many ups and downs, so many market underperforming years. But the good thing is that it made all those mistakes early. So now if you look at Tesla in 2022, it's a very polished company. I mean, it's incredibly profitable. They have one of the highest operating margins of the automakers. Their other businesses, energy storage, are also very, very profitable. So they may not make as many cars as the GMs and Toyotas of the world, but they're converting more of that revenue to actual profit. So Tesla as the stock, people will go back and forth about that, but Tesla as a company is a very, very impressive company. And it's just going to be very hard for a new player that's years behind Tesla to achieve that same competitive advantage when you have so many other legacy automakers chopping at the bit to take a slice of that EV pie. The legacy automakers certainly get forgotten about a lot in the EV conversation. We look at Lucid and Rivian and all these new companies, and they're very exciting. They're making these big promises. They have all this new tech, but make no mistake, these legacy automakers are not just going to sit idly by and let these new guys come in and take market share that took them decades to build. The legacy automakers have much bigger workforces, a lot of money, and most importantly, they are experienced in mass production. This is something that Tesla really struggled with back in the day. Tesla had this amazing technology, but kind of fumbled the mass production bit, trying to over automate things, use robotics too much, kind of over perfect the whole process. I think one legacy automaker that really stands out to me is Ford, because they're really putting their money where their mouth is. They're investing $11.4 billion into twin EV production and battery plants in Kentucky and Tennessee. They expect to generate 40% of their revenue from EVs by 2030. And they also have a new management team, which is a really big deal in this space because it's going to separate companies that are just making pledges from ones that are actually, really putting real dollars at work. Ford also has the F-150 Lightning, which is one of the coolest products out there. It has over 150,000 reservations for this vehicle, which just dwarfs, Rivian's 71,000 for its R1T pickup truck. It's also a lot cheaper than Rivian's truck and, of course, Lucid's sedan. And then Ford has the existing brand as the market leader in the pickup truck market. They also have the Mach-E SUV, which is going very well. So, you look at a company like Ford, and then you think 5 years down the line, there's probably going to be a lot of other legacy automakers that are similar to it. But, Ford has done a really good job at assessing the industry and saying, we really think that there's going to be this shift from the internal combustion engine to the electric motor. We want to emerge as an even bigger leader in pickup trucks. So we're going to start investing really heavily now to do that. And from what I can tell, they've done a really good job so far. A whole nother segment of the EV industry that we also don't think of that much is the infrastructure plays, the picks and shovels plays. And a lot of that is the EV charging network, similar to all these gas stations that underpin the way that we get around. We're going to need a lot of charging stations, both at home and at businesses and workplaces and things like that. And ChargePoint is the industry leader in this field. I think they have 162,000 charging points. But the thing that really piques my interest is that they've grown a lot of their DC fast charging. So I think just as of June 30th, 2021, DC charging ports made up like 2% of their total ports. As of early December, when they reported the most recent earnings, DC charging ports are now 7%. So a lot of their new ports that they're building are DC fast charging, and that's what the Tesla superchargers are. They're these DC fast charging, you don't have time to just sit around on a road trip kind of thing. So at home, they can be slower. If you're going to the grocery store, they can be slower, but in a lot of use cases, you do need faster charging, and ChargePoint recognizes that. They also went public at a pretty difficult time. Their fiscal year 2021 performance was drastically kind of a wet blanket. They only grew revenue by 1% in fiscal year 2021 compared to fiscal year 2020. But this year, fiscal year 2022, it's looking like they're going to grow by over 50%. So, just like Lucid, Rivian, it's a growth story, right? So it really depends on kind of keeping the pace, keeping the momentum going. But I just think that charging will be a really big part of this industry. And the good thing about ChargePoint is it doesn't actually care, if Rivian is better than Lucid. it's brand agnostic. So all it needs is just the general tailwinds of the industry to grow, and it will grow along with that. It's a very fun exercise to think big picture about these kinds of things and not look so much into, oh, did Rivian deliver 600 cars or 500 cars? I'm not reading too much into the quarterly performance of these companies and zooming out and thinking about the big picture. So when we think 10 years down the line, right, long-term investing, which is something we try to talk about a lot at the Motley Fool, I think everyone would probably agree that the auto industry is going to look a lot different than it does today. It's just a matter of what companies are going to rise, what companies are going to fall. And starting with the legacy automakers, I think it's going to be the ones that put capital to work early, like the first 5 years of this decade, like Ford, like GM are doing, and not just companies that are making these 2050 carbon neutral goals with not a lot of short to midterm goals behind them. We're seeing a lot of, it's called greenwashing in the space in that regard. And then with the up and coming players, I think that because they're not going to have the profitability or positive operating cash flow for a long time, it's going to really depend on building a reputation for delivering on promises, which is something I give Lucid a lot of credit for, and something I certainly hope Rivian will be able to do as well, because that is going to keep the investment thesis alive and kind of keep the company solid until they're able to become profitable, mass produce, things like that. So, my advice would just be, no matter how good an opportunity looks, no matter how big of a lead Tesla has, no matter how exciting Lucid or Rivian is, no matter how good of a jump Ford has in the electric truck market, it's just no one really knows what's going to happen, and no one knows what legacy automaker will suddenly announce a huge investment similar to Ford has done. So I would just say keep a basket of both EV charging stocks and the automakers, just because that will still leave a lot of room for upside in case one of them goes up 5 or 10-fold, but it will also limit the downside risk in case Lucid just goes to zero, doesn't work out.